Hello guys, welcome to Trading Visa. Today we are going to discover Bollinger Bands strategy. It's a very popular strategy between all sorts of traders, either at-home traders or professional traders. By being able to apply this strategy, you can predict future price movements and support your strategy, your general strategy by this very important knowledge. So let's start from the very beginning. Bollinger Bands is a common approach. So when using Bollinger Bands, you can identify overbought or oversold market conditions. Using bands as overbought or oversold indicators relies on the concept of mean reversion of the price. For those who are familiar with time series, they know that time series can follow several patterns. It can be mean reversion, it can be trend, or it can be random walk, or and so on. So what actually mean reversion means? By mean reversion, we suppose that price always converges to its mean value, to its average. Doesn't matter how price go far from its average, it always will go down to its average value. So key word for this is convergence, right? Converges to its mean. So mean reversion assumes that the price deviates sufficiently from the mean or average, it eventually reverts back to the mean price. So let's look how it works. Here I drew some calculation of Bollinger Bands. Actually, Bollinger Bands, it's moving average plus some volatility of its typical price, which is average of high, low, and close price for this certain period. So we can divide each band on two parts: moving average and volatility of typical price. And under the moving average, we understand moving average of typical price as well. So it's a combination of volatility and moving average. In our simple concepts, we apply just moving average to see as a support and resistance level, but here we also add volatility, so we can see how turbulent is the market and apply it in our market conditions, right? So let's go further. Bollinger Band strategy contains of several parts. So we can predict price targets, we can set price targets, we can see at squeeze, breakout, and some shapes like W bottom or M top. So let me explain it in detail how it actually works and what it means, and how you can get your profit from that knowledge. Let's start from the mean reversion and target price determination. So here you can see 20 period mean moving average. It's a yellow line, and you can see how price behaves around that, right? You can see that once the price cross this average, it goes beyond to the lower band, right? And then it bounce, go up, and once it crosses its moving average line, it goes to the upper band, right? And then this pattern repeats again and again and again. As you can see, there are very few situations when the price went beyond this support and resistance level far away, right? So just look at this pattern and see how price behaves in relation to moving average, and follow the strategy, right? It The key thing is here you should understand that price follow mean reversion. You can set mean and see whether price go to its mean all the time or not. Is there any trend or random walk? Looking at this graph, we can see that price actually converges to its mean almost all the time, but sometimes we can see also breakouts like here, and which determines trend, or squeezes like here. And so I will explain you it more deeply on the next slides. M top and W top bottom shapes. As you can see here, we can see some shapes that was drawn, and then the price bounced back to the upper band, right? And then the shapes repeated with M bottom, and then the price went down to W bottom, and this shapes repeats again and again across whole period, right? And we can track these shapes and use them as signal to enter the market and to predict future direction of the price. It's very simple concept, but you should keep it in mind and rely on it when you trade on the real market conditions. Band squeeze. As I showed you on the calculation slide, the band consists of two parts. It's moving average and standard deviation. Under standard deviation, we can suppose volatility, right? And the higher the distance between bands, the higher their volatility is, right? And here you can see as this distance is shrinking, and it means that volatility becomes lower. When volatility becomes lower, we can rely on it as signal for future trend formation, like here. So when we have low volatility and bands are squeezing, so we can predict with a high probability future trend, and into the market at the very early, right? It means like there is some reversion. There is like market participants become very calm regarding the future price direction, right? And they want to change something. They want to change the trend, and that's why we see a squeeze, and after that we see as volatility increases, and this cycle repeats again and again. So in this way we can apply the squeeze. Breakout or support and resistance. When price break out support and resistance or any band, it can be an indicator of future of trend reversion, right? Of future of reversion of price movement, and the stronger the breakout, the higher the probability of of trend formation, right? Of reverse trend formation. We can see it on this slide, on this graph here and here. Here we formate a bullish trend, but here we formate a bearish trend. As you can see, here we can see two red candlesticks that broke out the graph. It means that it's very strong signal to enter the market and to write a bearish trend. And here it's very strong signal. You can see green candlestick that broke out upper band. It's a strong signal for bullish trend, and you can ride it. That's a breakout. Here we have recap, small recap. So when you apply this strategy, please make sure that price follow mean reversion concept rather than trend to track the price movement in relation to 20 period moving average. You can determine target price levels with corresponding stop and loss, so you can see at bands and put some stop and loss on it. Identify strong breakout of Bollinger Bands to run the trend. Yes, if you see very strong breakout of any band, you can, with high probability, you can ride the trend, but make sure in advance that it's trend formation. Sometimes there can be like fake signals. Do not follow fake signals until you see the trend, right? When you see the trend, then enter the market and ride it. Using only the bands, yes, actually, Bollinger Bands is not very strong strategy. It's very useful strategy and it's very popular, but in combination with some other indicators like RSI or MACD on like super trend and so on. I will explain you in my next tutorials about these combinations and show you how it works. But for you it's very important to understand now Bollinger Bands separately, right? And now we also can test it and to see how robust and how strong the strategy is. Let's go to the real market conditions. Here we have Microsoft Corporation, and we can test it right now. So here we have Bollinger Band strategy. You can see that it has just 0.01% of net profit. It's very low, very low. Can apply like 4. Still doesn't work. We can change some multiples that was shown as M in the formula, but it doesn't help. But we can change period of moving average. No, it doesn't work. Let's make it shorter. Yes, here we have 0.11%. Let's go to 10. Yeah, the maximum value that got is 0.11%. Yes, it's very weak strategy, but when we will use it in combination with other indicators, I think it will be profitable. It will be much profitable. So stay with us, subscribe on my channel. It's Trading Wizard. Take care.